Oh, well, today is the day where we do some analysis. Ladies and gentlemen, Asian guy here, we need to take a deep breath and look at the chart. Yesterday felt like the end of the world. If you were watching the tickers in real time, you saw silver hit that 84 mark, a number we've been anticipating for months, only to see it vaporize in a violent high-volume sell-off that sent shockwaves through the community. Many of you are looking at your portfolios today and feeling that pit in your stomach, wondering if the silver squeeze was just a dream or if we've just witnessed the most aggressive shakeout in the history of the commodities market. This wasn't just a technical pullback, it was a psychological operation. Before we dive into the data that the mainstream media is too afraid to touch, specifically the hidden role of the Chinese export curbs and the massive divergence between paper and physical prices, make sure you hit that subscribe button and tap the notification bell. In a market this volatile, being 24 hours late to the news is the difference between protecting your generational wealth and losing it all. If you're still holding your physical bars and you refuse to let the big banks scare you out of your position, smash that like button right now to show the algorithm that our community is stronger than their manipulation. What we are looking at on the chart today is a classic blow-off top signature, but with a geopolitical twist that makes it far more dangerous for those who don't understand the mechanics. Yesterday, silver hit 84.01. A record high that should have triggered a massive wave of buy stops and pushed us toward the 100-row psychological barrier. Instead, the moment we crossed that threshold, the trap was sprung. We saw an influx of nearly 500 million ounces of paper silver sold into the market in a matter of minutes. To put that in perspective, that is roughly half of the world's annual silver production sold in a single hour on a digital exchange. This isn't natural market behavior. This is institutional intervention designed to reset the price before the new reality of 2026 sets in. The mainstream news is calling this profit-taking and technical exhaustion, but they are ignoring the elephant in the room, the CME Group's emergency margin hike. By increasing the cost of holding a silver contract by 25% overnight, the exchange effectively forced every high-leverage trader to either come up with millions in cash or sell their position immediately. Most chose to sell. This created a cascade of stop-loss orders. As the price fell from $84 to $80, then $78, then $74, the liquidations became automatic. The computers took over, and for about 60 minutes, there was no bid in the market. It was a free fall. But while the paper price was crashing in New York, something very different was happening in the physical market. Reports are coming in from bullion dealers across North America and Europe that while the spot price dropped 10, their premiums actually increased. If you tried to buy a 1-ounce silver eagle yesterday during the crash, you weren't paying $74, you were still paying close to $90. This decoupling is the most important metric for any real silver investor to track. The paper price is a reflection of liquidity and leverage. The physical price is a reflection of scarcity and demand. And as we head into January 2026, the scarcity is about to become a global crisis. The real catalyst for this Plunged was not just the margin hike, it was a preemptive strike ahead of the January 1st Chinese export regulations. China has officially announced that it will implement a strict licensing system for all silver exports, effectively nationalizing its silver supply to prioritize its domestic AI and solar industries. The West knows that once this door closes, the primary source of refined silver for the global market disappears. The banks needed the price to drop now so they could cover their massive short positions before the physical supply truly vanishes. They are trying to scare you into selling your physical metal to them at $74 so they can turn around and sell it to industrial users at $120 in 6 months. We have to look at the RSI, or Relative Strength Index. Before the crash, silver was trading at an RSI of nearly 90 on the daily chart. In plain English, that means the market was overheated. A pullback was not only likely, it was necessary for the long-term health of the bull market. No asset goes up in a vertical line forever. Even the legendary 1980 rally had multiple 5 and 10 corrections before it made its final run to 50. If you can handle the volatility, you realize that $74 is still nearly double where we started the year. The historic 2025 rally isn't dead, it's just moving into its secondary phase, the institutional accumulation phase. Now, if you want to understand why that $84 mark was so significant, we have to talk about the industrial panic that has been simmering under the surface all through 2025. You see, while the paper traders in Chicago were playing with their leverage, the big tech companies in Silicon Valley and the solar giants in China were having a very different kind of conversation. They weren't looking at profit-taking, they were looking at survival. Silver isn't just a shiny coin you keep in a safe. It is the most electrically conductive metal on the periodic table. There is no substitute. And as of 2025, the world finally woke up to the fact that we are running out of the blood of the modern economy. In late December, just as the price was peaking, Elon Musk tweeted something that sent chills down the spine of every supply chain manager on the planet. He replied to a post about the new Chinese silver export restrictions with 4 simple words: "This is not good." Elon knows better than anyone that Tesla and SpaceX cannot function without a steady, massive flow of silver. Every electric vehicle contains about 1.5 ounces of silver, nearly double what a gas-powered car uses. Every Starlink satellite, every AI-driven robot, every semiconductor in his massive Dojo supercomputer requires high-purity silver. When the man who builds the future says this is not good, you should probably listen. But here is the real kicker that most of you missed. On November 6th and 7th, 2025, the United States government did something it hasn't done in decades. They officially added silver to the USGS critical minerals list. For years, silver was just a precious metal. Now, it is a national security priority. This designation changes everything. It opens the door for the Defense Production Act. It streamlines mining permits, and it signals to the world that the U.S. is prepared to treat silver the same way it treats lithium, cobalt, and rare earth elements. Why? Because the U.S. currently imports over 70% of its silver. We are vulnerable. And our primary source of refined silver? You guessed it, China. China currently controls between 60% and 70% of the world's silver refining capacity. And on January 1st, 2026, just a few days away, Beijing is slamming the gates shut. They aren't banning exports, but they are implementing a licensing regime. This is the exact same playbook they used with rare earth metals in 2010. They create a bureaucratic bottleneck where only state-approved firms can ship silver out of the country. This effectively weaponizes the silver supply. If you are a Western manufacturer and you want silver for your solar panels or your AI chips, you're going to have to play by Beijing's rules. The plunge we saw yesterday from 84 back to 74 was the paper market trying to price in this geopolitical earthquake. It's not that silver is worth less. It asks that the risk of not being able to get it at all has just gone through the roof. Look at the industrial data from the first half of 2025. Global solar panel installations hit a record 380 gigawatts. That alone consumed over 440 million ounces of silver in just 6 months. We are on track for a 5th consecutive year of a structural silver deficit. You cannot bridge a deficit that large by raising margin requirements on the COMEX. All that does is hurt the small trader. It doesn't create more silver in the ground. And mining silver is notoriously difficult. Most of it comes as a byproduct of lead, zinc, and copper mining. You can't just turn on a silver mine. It takes 10 to 15 years to bring a new project online. We are hitting a supply wall at the exact moment that demand is going parabolic. So why did the price drop $10 in an hour? Because the smart money needed to create a panic. They knew that $84 was a blow-off level where a lot of retail traders would have their stop losses set. By triggering those stops through a margin hike, the big banks were able to scoop up physical metal and cheap contracts from panicked sellers. They want your silver before the January 1st deadline. They want to be the ones holding the critical mineral when the Chinese export curbs kick in and the world realizes that 84 was actually cheap. Technically, this pullback is a gift for anyone who missed the rally. We are looking at major support zones. The $54.50 level, which was a massive ceiling for 13 years, is now our ultimate floor. But in the short term, we are watching the $72 to $73 zone. This is where the gold to silver ratio is finding its own support. If we hold $72, the next leg up is not just back to 84, it's a move toward 100. We are in a price discovery territory now. There is no historical resistance above $50 anymore. We are in uncharted waters, and in uncharted waters, the waves are always violent. I want you to think about the AI revolution. Every major tech firm is currently building massive data centers. These centers are packed with high-performance servers, and those servers use silver in their connectors and switches because it asks the only metal that can handle the conductivity and heat requirements of next-gen processing. We're talking about an industry that didn't exist on this scale 5 years ago, and it's now competing with the solar industry for every available ounce. The historic 2025 rally was driven by the realization that silver is the new oil. The plunge yesterday was just a pothole on the road to a much, much higher destination. If you're feeling scared today, remember why you bought silver in the first place. Was it to trade a $5 move on a screen? Or was it to protect your family from a world where paper money is being printed into oblivion and strategic minerals are being weaponized? The fundamentals haven't changed. If anything, the China news and the U.S. critical minerals designation have made the bull case for silver stronger than it has ever been in human history. We are watching the birth of a new silver standard, where the metal isn't just money, it's the key to the future. We need to look at the chart with a cold, calculating eye. When silver hit $84, it didn't just touch a price, it touched a geopolitical tripwire. You have to understand that for the last century, the price of silver has been dictated by the London and New York exchanges. It was a Western-controlled asset. But as we move into 2026, that hegemony is being dismantled in real time. The plunge you saw yesterday was the final attempt by the old guard to maintain control over an asset that is rapidly becoming the most sought-after mineral on the planet. If the price of silver is allowed to reflect its true scarcity, the entire Western debt-based financial system is at risk because it exposes the massive inflation that has been hidden for years. Let's talk about the Asian divergence, because this is where the truth is hidden. While the COMEX was flashing red and the price was dropping $10 in an hour, the premiums on the Shanghai Gold Exchange, SGE, remained stubbornly high. In fact, for the first time in history, we are seeing permanent backwardation in the East. This means the market is so hungry for physical metal that they are willing to pay a massive premium to get it now rather than waiting for a future delivery. In New York, silver is treated like a casino chip. In Shanghai, it is treated like survival. This arbitrage, the difference between the cheap paper price in the West and the expensive physical price in the East, is a vacuum that is sucking every available ounce out of the COMEX and LBMA vaults. Every time the West slams the price down using margin hikes like advisory number 25393, they're essentially holding a fire sale for the rest of the world. Central banks in the BRICS nations aren't selling their silver, they are buying the dip. They are watching the Western paper traders panic sell their contracts, and they are quietly standing in line to take delivery of the physical bars. Since the U.S. government added silver to the critical minerals list in November 2025, the world has realized that this is no longer a fair fight. It is a race to secure the materials for the next industrial revolution. Think about the sheer scale of the AI demand. We've discussed solar, but AI is the new black hole for silver supply. By 2026, it is estimated that the global AI infrastructure will require nearly 150 million ounces of silver annually for high-speed connectivity and power management. When you combine that with the 400 million ounces needed for solar panels and the 100 million ounces for the automotive sector, you are looking at a situation where industrial demand alone could consume the entire global mine production. Where does that leave the investors? Where does that leave the silver stackers? It leaves us in a position where the price can only go one of two ways. It either stays low and the world runs out of metal in 6 months, or the price explodes to a level where people are forced to stop using it. That equilibrium price, the price where industrial users start to cut back, is nowhere near $84. Most analysts believe that until silver hits at least $125, the demand from the solar and AI sectors will remain inelastic. They will pay whatever they have to pay because the silver component is only a small fraction of the total cost of an AI server or a solar farm, but without that silver, the multi-million-dollar project is dead. This is why the plunge yesterday was so artificial. It was a financial intervention, not a fundamental shift. And let's look at the military factor. In the current 2025 geopolitical landscape, silver is a war metal. Every precision-guided munition, every Tomahawk missile, and every advanced fighter jet relies on silver's reliability. Unlike consumer electronics, military hardware cannot risk a failure due to an inferior substitute. When the U.S. Department of War, as it's being increasingly called in policy circles, recommended silver for the 2025 critical minerals list, they were acknowledging that our defense readiness is tied to this metal. If China controls 70% of the refining, and they implement export licenses on January 1st, we are looking at a silver embargo in all but name. So, when you see that red candle on your screen, don't just see a loss of dollars, see a transfer of power. The banks use the 84 blow-off top narrative to scare the retail public into handing over their physical metal before the 2026 supply shock begins. They want you to think this is 2011 all over again. In 2011, there was no AI revolution. In 2011, solar was a niche industry. In 2011, China wasn't implementation export curbs. The fundamentals today are 1,000 times stronger than they were 14 years ago. Technically, the plunge has created a massive bullish flag on the weekly chart. While the daily chart looks scary, the macro view shows that silver has simply come back to test the breakout level. If we hold the $70 to $72 range, we are setting the stage for a move that will make the rally to $84 look like a warm-up. We are entering the mania phase of the bull market, and in a mania, the corrections are fast, deep, and designed to leave you behind. If you sell now because of a 1-hour paper crash, you are playing right into the hands of the institutions that are desperate for your ounces. Take a deep breath. Look at the data, not the price. The deficit is real. The export curbs are real. The critical mineral designation is real. The only thing that isn't real is the paper price on the COMEX. We are moving toward a world of physical reality. And in that world, the person holding the silver makes the rules. As we stand on the precipice of 2026, we have to talk about the end game for this historic rally. You see, the $84 mark was never the destination. It was a checkpoint. The reason the plunge was so violent is that we are no longer trading in a normal market. We are trading in a short squeeze of global proportions. When you have a market where 350 ounces of paper are traded for every 1 ounce of physical metal, the system is inherently unstable. Yesterday's $10 drop was the sound of the structural supports beginning to snap. The banks are trying to prevent a total meltdown of the short side of the market, but in doing so, they are only making the eventual explosion more powerful. The countdown to January 1st is the only thing that matters right now. While the media focuses on the red candles of yesterday, the smart money is focused on the supply cliff of tomorrow. When China's Ministry of Commerce officially begins enforcing those silver export licenses, the global just-in-time supply chain for silver is going to hit a brick wall. We are talking about a world where the biggest tech companies on the planet, Apple, Samsung, Tesla, will be competing for the same dwindling pile of Western refined silver. If you think the price was volatile at $84, wait until you see the panic buying that occurs when a Fortune 500 company realizes they can get the metal they need to finish their production run. This is why I tell you to take a deep breath. In the grand scheme of things, a $10 dip is noise. If you look at the 1970s bull market, silver went from $2 to $50. Along the way, it had corrections that were far more brutal than what we saw yesterday. The difference is that in the 1970s, silver wasn't a critical mineral. It wasn't the backbone of the green energy revolution. It wasn't the literal hardware of artificial intelligence. Today, the floor for silver isn't just determined by investors. It's determined by the cost of the entire technological future. So, what is the strategy for the next 90 days? First, stop watching the 1-minute charts. They are designed to trigger your fight or flight response and make you act emotionally. The smart money wants your silver, and they use the charts to steal it from you. Second, verify your physical holdings. If you're holding paper silver in an account that doesn't allow for physical delivery, you need to understand the risk. In a real supply shock, those accounts are often settled in cash, meaning you get the dollar value of the crash, not the actual metal. If the goal is to protect your wealth, there is no substitute for physical metal in your own possession or in a fully allocated, segregated vault. We are looking at a Q1 2026 that could see the most massive short covering event in the history of commodities. Once the market realizes that the Chinese export faucet has been turned off, the scramble for physical metal will ignore the margin hikes. Margin hikes only work when there is enough metal to satisfy the traders. When there is no metal, the price goes to whatever level is necessary to bring new supply into the market. And at $74, nobody is building new silver mines. At $84, nobody is recycling their old electronics at a massive scale. To actually fix the silver deficit, the price needs to be high enough to change human behavior. We aren't there yet. Ladies and gentlemen, we are witnessing the birth of a new era. The silver blow-off top narrative is a distraction. What we are actually seeing is the silver breakout from a 40-year prison. The plunge was the market testing the bars of that cage one last time before it escapes for good. If you can hold through this volatility, you're participating in one of the greatest wealth transfers in human history. The historic 2025 rally was just the opening act. 2026 is when the real show begins. I want to leave you with one final thought. In 10 years, nobody will remember the $10 drop in December 2025. They will only remember whether or not they held their position when the world realized silver was the most important asset of the 21st century. Don't be the person who sold at $74 only to watch it scream past $100 in a matter of weeks. Stay focused on the fundamentals. Stay focused on the physical reality. Oh, well, that was a lot of analysis today, but it had to be said. If you found this deep dive valuable, do not leave without subscribing. This is the only channel that is going to give you the raw, unfiltered data on the silver market without the mainstream bias. Share this video with every silver stacker you know who is feeling the heat today. Let's keep this community informed and resilient. Give the video a thumbs up if you're still in the fight, and leave a comment below with your price prediction for January 1st, 2026. Are you buying the dip, or are you waiting for more clarity? I want to hear from you. Keep your head on a swivel, keep your stacks growing, and I will see you in the very next update. This is the Asian Guy, signing off. Take care of yourselves.